Let's see how long it takes to read Reg D, Reserve Requirements of Depository Institutions. The Federal Reserve Act requires each bank to keep a certain percentage of its deposits on reserve with the Federal Reserve Bank. While Federal Reserve member banks have had reserve requirements since 1914, state non-member banks were not subject to the Federal Reserve's requirements until the Monetary Control Act of 1980 was enacted. Before this law, only individual state laws covered state non-members. The reserve requirement enables the Federal Reserve Board to influence monetary policy more effectively. By raising or lowering the reserve requirements of the banking system, it can tighten or loosen the money supply. A bank's ability to lend money is restricted by the amount of its funds held in reserves. In 2011, the Federal Reserve amended Reg D to simplify the computation and maintenance requirements. These requirements became effective in 2012 and 2013. Coverage. Institutions covered. The FDIC, insured banks, savings banks, mutual savings banks, savings associations, or any institution that is eligible for deposit insurance. 2. Insured credit unions. 3. Any member of a federal home loan bank. 4. A branch of any foreign bank located within the United States if the parent foreign bank or the foreign company that owns the bank owns or controls foreign banks that have assets in the aggregate of more than $1 billion. 5. A branch of a foreign bank located within the United States that is eligible to apply for FDIC insurance and edge or agreement corporations. The exemptions are 1. Deposits payable only outside the United States. 2. Bankers' banks, that is, financial institutions that are organized solely to do business with other financial institutions and are owned primarily for the financial institutions with which they do business and do not do business with the general public. A banker's bank may do business with the subsidiaries of or organizations owned by the depository institutions, the officers, directors, and employees of depository institutions, individuals whose accounts are acquired at the request of the bank's supervisory authority due to actual or impending failure of another depository institution, share insurance funds, and depository institution trade associations. Definitions. Deposit. This is going to take a while. Deposit includes 1 through 7. Unpaid balance of money held in an account, including interest paid for which the bank is obligated to give credit to the depositor. 2. Money in an account for a special purpose, such as escrowed funds, funds held as a security for securities loans made by the bank, or funds held to meet acceptances. 3. Outstanding drafts, teller's checks, certified checks, cashier's checks, money orders, or officer's checks issued for any purpose. 4. Due bills or other liabilities of the bank to sell or deliver securities that involve the receipt of funds by the bank or a debit to the account of the customer before the securities are delivered, which are outstanding for 3 business days before the securities are delivered, unless the bank delivers the securities or fully collateralizes the obligation with securities. Liabilities of a non-depository institution, bank, affiliate on any promissory note, due bill, or other obligation with a maturity of less than 1.5 years if the proceeds are used to supply funds to the bank, unless such an obligation of the bank would not be considered to be a deposit. A credit balance. Any obligation of the bank, whether written or oral, used by the bank as a means of obtaining funds, except A through E. Obligations held for the account of a U.S. office or another bank, foreign bank, edge or agreement corporation, or a New York investment company. The U.S. government, the Export-Import Bank, Minbank Capital Corp., the Government Development Bank for Puerto Rico, a Federal Savings Bank, Federal Reserve Bank, I should say, a Federal Home Loan Bank, or a National Credit Association, Administration, Central Liquidity that say facility? B, obligations guaranteed by the United States government that the bank is obligated to repurchase. C, uninsured obligations that are subordinated to the claims of depositors and have a weighted average maturity of 5 years or more, issued with the approval of the bank's supervisory agency. D, one-day borrowing from a securities dealer or federal funds transactions. E, the sale of bankers' acceptances that are in compliance with Section 13, Paragraph 7 of the Federal Reserve Act. Bankers' acceptances that do not comply are considered to be deposits. Deposits are not segregated trust funds, obligations that are conditional or contingent, obligations where the proceeds are not used for loans, investments, maintaining liquid assets, and so forth. 4, accounts payable. 5, installment loan payments that are held until the entire payment of principal and interest is received. 6, dealer reserve accounts to which the dealer does not have access until the installment loans are repaid. 7, dividends between the time of declaration and payment. 8, pass-through accounts. 9, retention of a 10% interest or less of a conventional mortgage pool sold to third parties. 10, obligations to municipal or state housing authorities under loan-to-lender programs where tax-exempt bonds are issued and proceeds are lent to the bank for housing finance purposes. 11, shares of a credit union held by the National Credit Union Administration. And 12, liabilities of a U.S. branch of a foreign bank to another U.S. branch of the same bank or of a U.S. office of an edge corporation to other U.S. office of the same edge corporation. Demand deposits. 1 and 2, deposits payable on demand or with a maturity of required notice period of less than 7 days, or for which the bank does not reserve the right to require at least 7 days notice of withdrawal. And 2, demand deposits include checking account, certified checks, teller checks, and cashier's checks, traveler's checks, or money orders that are an obligation of the bank, checks or drafts drawn by or on behalf of a non-U.S. office of the bank or an account at a U.S. office of the bank, letters of credit that are sold for cash, withheld taxes or insurance, matured time deposits that have been renewed and that do not automatically renew, and an obligation to pay a check on an account of a customer whose account already has been debited. So these aren't just the definition of deposit anymore, this is the definition of demand deposits. Demand deposits, however, do not include 1 through 5, 1, time deposits and savings accounts. 2, a deposit on which the bank has reserved the right to require at least 7 days written notice before withdrawal or transfer of funds, and the account is either a negotiable order of withdrawal, now or money market deposit account, MMDA, or one from which the customer is authorized to make pre-authorized transfers or telephonic transfers. And 3, accounts that are subject to the bank's right to require at least 7 days notice of withdrawal and allow transfers to cover overdrafts or are automatic transfer service accounts, ATS accounts. 4th, an international banking facility, IBF, time deposit. And 5th, checks drawn by the bank on the Federal Reserve or on another bank. Section E, the definition of time deposit. A deposit has a maturity of at least 7 days. A time deposit or a portion thereof that may be paid during the period when an early withdrawal penalty would otherwise be required without imposing an early withdrawal penalty if one of the following exceptions applies, and that's A through God knows what. A being the death of any owner. B, when any owner is determined to be legally incompetent. Moving on to page 522. C. A withdrawal from an individual retirement account or a co-plan when the owner reaches the age of 59 and a half or is disabled. D, where a withdrawal came from an IRA is made within 7 days after establishing the account, and the depositor forfeits an amount at least equal to the simple interest earned on the amount withdrawn. E, when a bank pays that portion of a time deposit on which the FDIC insurance has been lost owing to a merger of 2 or more federally insured banks in which the depositor previously maintained separate time deposits for a period of 1 year from the date of the merger, And lastly, where a time deposit was withdrawn within 10 days after a specified maturity date, even though a deposit contract provided for automatic renewal at the maturity date. 3. Partial early withdrawals may be allowed with additional penalties of at least 7 days interest on amounts withdrawn within 6 days after each partial withdrawal. 4. Time deposits include A through H. A. Funds payable on a maturity date not less than 7 days after the date of deposit. B. Funds payable at the expiration of a specific time at least 7 days after the date of deposit. C. Funds payable on written notice actually required to be given by the depositor not less than 7 days before withdrawal. D. Christmas Club or similar accounts. E. Share certificates and certificates of indebtedness issued by credit unions, certificate accounts issued by savings and loan associations. F. Savings deposits. G. An IVF time deposit. H. Promissory notes, obligations, certain bankers' acceptances held by any office of a bank or edge or agreement corporation located outside the United States, a foreign bank located outside the United States, a foreign government, an international entity of which the United States is a member, or any foreign entity designated by the Federal Reserve Board. 5th, 6th, and 7th. 5th, a time deposit may be represented by a transferable, non-transferable, negotiable, or non-negotiable certificate, instrument, passbook, or book entry. 6. Time deposits are transferable unless there is a specific statement indicating that it is not transferable, such as a statement may be on the certificate, instrument, passbook, and so forth. And 7. A time deposit that is not transferable can still be pledged as collateral for a loan and can be redeemed early owing to death or incompetence or by operation of law. Subsection F is, I suppose, the definition of savings deposit. Deposit for which the depositor is not required to give a written notice of withdrawal, but for which the bank may at any time require that notice of not less than 7 days be given before withdrawal. 2. Includes deposits from which the depositor can make no more than 6 transfers or withdrawals per month or a specific period of at least 4 weeks to another account of a depositor at the same institution or to a third party by means of a pre-authorized automatic or telephone transfer, check, draft, or debit card, and does not include automatic loan payments at the same institution. Does not include withdrawals or transfers between the holder's account at the same institution if such transfers or withdrawals are made in person, by mail, but by messenger, or via an ATM. 3rd, a savings deposit does not lose the designation if the bank imposes a notice of withdrawal. And 4th, funds deposited to the bank's own trust department to be used to cover checks or drafts or transaction accounts, not savings deposits. Transaction accounts, the definition of such in subsection G, starts with number 1, accounts from which a depositor may make transfers or withdrawals by negotiable or transferable instrument, including telephone transfer or other similar device for purposes of making payments to third parties. 2. Transaction accounts include the following: demand deposits, deposits on which the bank has reserved the right to require at least 7 days notice of withdrawal but are subject to check drafts, share drafts, and similar instruments, including now accounts but not including MMDAs, unless the account is a savings deposit in form but is deemed to be a transaction account by ruling of the Federal Reserve. For example, the following types of accounts have been determined to be transaction accounts in substance, even though they are savings accounts in form. That's the conversion of MMDA to NOW accounts. The bank allows the conversion of MMDA to a NOW account each month once a transfer limit has been reached, and then reconverts the account at the end of the month. Multiple savings accounts, that's the bank suggests that the customer open multiple savings accounts, and after the transaction limit has been reached on one account, all funds are transferred to the next account. This process continues with funds shifted to the subsequent accounts during the month so that the transaction limit is not breached on any of the accounts. And 3rd, transaction accounts linked to time deposits. In this case, the bank allows or suggests the depositor enter into a arrangement whereby funds are swept daily from transaction accounts into time deposits, where funds are commingled with those of other depositors. Time deposits are purchased daily and maturities are timed so that at least one deposit matures each day. Funds from the maturing time deposits are deposited into transaction accounts to pay items presented on that day. And C, deposits on which the bank has reserved the right to require a 7-day notice of withdrawal and form, which withdrawals may be automatically made for purposes of 1 and 2. 1, transfers to a checking account to cover overdrafts, or 2, transfers to a checking account to maintain a specific balance. This category includes ATS accounts but not IRAs, or savings accounts with limitations on transfers and check rating ability. So we're back into the transaction accounts, including these deposits that have reserved the right to require the 7-day notice of withdrawal informs which withdrawals may be automatically made for those purposes just stated. And D and E. D, deposits on which the bank has reserved the right to require a 7-day notice of withdrawal form which the depositor may make more than 6 withdrawals per month or a similar period of at least 4 weeks for purposes of transferring funds to other accounts or for payment to a third party by means of a pre-authorized automatic transfer or telephonic agreement. This category does not encompass accounts that where there are more than 6 transfers made by mail, messenger, ATM in person, or by telephone if the check is mailed to the depositor, and E, accounts involved in the arrangement whereby a depositor may obtain credit to pay third parties through drawing of a negotiable or non-negotiable check or draft, and H, non-personal time deposit. 1 through 5. 1, a time or savings deposit including MMDA in which the beneficial interest holder is not a natural person. 2, a time deposit where the depositor is not a natural person, a trust account with a natural person as the beneficiary is not a non-personal time deposit. 3, a transferable time deposit. 4, a time deposit represented by a promissory note or banker's acceptance of the bank held by A through F. A, an office of a bank located outside the United States. B, an edge or agreement corporation located outside the United States. C, an office of a foreign bank located outside the United States. D, a foreign national government. E, other foreign entities designated by the Federal Reserve Board. F, an international entity of which the United States is a member. 5, non-personal time deposits do not include non-transferable IRA or co accounts. And now accounts is the last definition I got of Ganesh before we go into the Reg D requirements. Now account eligibility. Federal Reserve Board interpretations of Reg D have 1 and 2 eligible entities and ineligible organizations. Eligible entities are individuals regardless of purpose and include deposits used by a sole proprietor or one doing business under a trade name may maintain a now account in the individual's name. B, pension funds, escrow funds, security deposits, and other funds held for the beneficial interests of individuals are eligible to be held in now account form. C, nonprofit organizations operated primarily for religious, philanthropic, charitable, educational, political, and similar purposes are eligible for now account status. Governmental units are generally eligible to maintain now accounts. These funds derive from the beneficial interest held by the United States, any state, or any political subdivision of the United States. E, funds held by a fiduciary individually by a corporate trustee or by a trust department, including funds awaiting distribution or investment, may be held in now accounts if all beneficiaries are eligible to maintain now accounts individually. F, now accounts of non-qualifying entities opened before August 31st of 1981. These are grandfathered. 2, ineligible organizations. All organizations operated for profit, including any partnership, corp, or limited liability company. B, credit unions and other mutual depository institutions. C, mutual insurance companies. D, crop financing organizations and farmers cooperatives. And E, agencies and embassies of a foreign government.